Bam! How's it going? It is I again, your boy, coming out live. And we're going to be talking about cash flow and appreciation today. And this is a hot topic because I think a lot of us, we find ourselves in a peculiar position where we want to be buying properties and we're not so sure, should we be buying properties for appreciation or should we be buying for cash flow? It's one of those questions that many people ask, and I always answer the question by saying, what are you looking for? But before we jump on to talk about that in particular on cash flow and appreciation, what is best for you to buy for? I don't know, but I'm hoping that at the end of this video, when we speak about the cash flow and the appreciation, at least by the end of this video, you will be able to know how you're supposed to be buying and why you're buying it for. And you can then make a decision in terms of, well, I want to buy for cash flow purposes or I want to buy for appreciation purposes. My name is TJ. I am the CEO of a business that's called the M5 Property Addicts. And in that business, we literally started it from ground zero to what it is today. And we have plus 200 tenants across the country and just below 400 students across the country. And all of that has been built on some of the information that I give you today. But for some of you who want to know a little bit deeper into it in terms of how can you learn, we've got a school that's called M5 Property Varsity, and you can literally jump onto it and you can start learning. The information that I share here is stuff that I am doing with my partners. And this is information that you would never find in a book, but you would find from a guy that is my best friend. That guy is called Doing. But let's talk about it. Cash flow versus appreciation. Would I buy for cash flow or would I buy for appreciation? Or would I buy for both? Who knows? Right. Let's jump on to talk about it first. What is cash flow? Cash flow, I always hear people saying that, oh, you got a positive cash flow or you got a negative cash flow. And I'm thinking, okay, all right, cash flow. Okay, let's define what cash flow is. Cash flow basically means that when you jump into a business or when you jump on an initiative where it's supposed to be giving you some money, profits, right? Now, if you do have the cost of acquiring whatever that you've acquired and you've got some expenses in between, so what you're going to do is going to say, hey, my expenses of acquiring this thing is X and my running maintenance, which is expenses, is X. Now, if you minus the X and this X here, you're going to get a Y. And the Y is the profit. So are you in profit, positive, or you're making a loss? The opposite of profit is loss, right? So when they're saying that, are you cash flowing? I'm of the view that when they're talking about are you cash flowing, it basically means that are you being positive cash flow? There is no negative cash flow in my view. That's just me. I just think that people that use the term negative cash flow, they are running away from the negative word of making a loss. Are you making a loss? Now, what is making a loss? Let's take an example. I buy my 2-bed, 1-bath, and I am paying the bank around about 10,000 rand, okay? Because I bought it. I don't have money. I bought the property via a bank, and I'm paying them 10,000 rand. I've got an additional expenses of 3,000 rand, and I get a tenant that's going to pay me 11,000 rand. Easy mathematics there. 10 plus 3 is 13. If I subtract my rent there, am I making money? Profit or loss? So it's a loss in these circumstances. But hold on. The same example where I've got a 10,000 rand on a property as an expense, an additional 3,000 expense, we call it everything else, from rates and taxes to wara, all of those things. Now, but we are paying, rent is being paid to us for 19,000, right? Now, are we making profit? If the answer is yes, we are cash flowing. That is what is meant by cash flow. I hope that definition of cash flow makes sense. Right, so now that we know that that is what is cash flow, would you buy for the purposes of cash flow? So would you buy for the purposes of making a profit? If you go out to buy a property today, would you buy it for the purposes of profits? The answer is yes, maybe for many of us, right? But hold on, there is other people that would go out and buy a property for the purposes of appreciation. I buy properties in places like A, B, C, D. Why? Because the appreciation is higher there. Now, there is another schooling that I want to bring you to the equation here, right? What John and Jane does might not be good for me because I'm a different person from the two of them. So I want to jump on to define what is appreciation. Appreciation is when you buy a property anywhere else in the country, there is generally all the general maintenance that you need to do on the property, but for the properties to actually gain appreciation, there is very minimum things that you need to do as an individual other than maintaining your property. The only other thing that is going to be there is that everything that is happening in the economy is going to drive the appreciation to go a little bit up. We have seen places in South Africa, I think in general, our appreciation is around about a 7%. Let's just call it a 10% for today because there are other areas that go above 10%. And you need to figure out which one those are, because then if your property is literally earning a 10% in that area year on year, if we take in a rate of a 10-year gap and your property is making a 10%, every year for 10 years, what's the return there? Now it starts making sense for some people that want to jump on into appreciation. And they start jumping around and say, TJ, I told you so. You should have bought in that area. Well, there is nothing wrong for buying for appreciation. I am just a different guy. Maybe I might not buy it for appreciation alone, or maybe I might buy for cash flow only. But we'll talk about that at the end. What would I do? But today it's kind of like defining this too, and for us to see what is best to buy for cash flow or for appreciation. Now that we know what is appreciation, right, and we have now defined what is cash flow, let me give you another scenario. The other scenario is that I am a businessman. So I go out there and I sell more fire. Right, we all know more fire, and my brother from another mother, DJ Spoo, he sells those things. He makes those things and he sells them. He promotes them. I like the way he promotes his stuff, and there is more people selling more fire out there. So more fire to more fire, yeah? Okay, good. Now, you are making your business there. That's your primary business. Here is the thing where we get confused when we are at the bride. Someone says, nah, I'll never buy for cash flow. I'll buy for appreciation. Hold on. The guy who's selling more fire, he is pushing thousands and thousands and thousands of tons with more fire. You don't know that. That's his primary business. But he's making profit. And whilst he's making profit, he's kind of like trying to figure out where can he hedge his money. Yes, that might be a new term for you. So figure out what the name hedge means. Hedge basically means that you want to safeguard your money somewhere else. If you were to put your money in the bank today, potentially it might be earning, let's say, a 5%. So if I buy a property that's going to be giving me a 10% year on year, then I am hedging my money. And my money is working harder for me. But hold on, this person here has got a business, which is a primary business, where they are hedging their money. Their conversations with you who is going to the bank, it's a different ballgame. Now, this is the conversation of Jane, Betty, and Susan that we spoke about. What might be good for all of them is not good for me. So now the question that we want to answer for is, what is best to buy for, cash flow or for appreciation? With these examples that I've given you, you can immediately see that there is no answer for all of us. There is no ruling thumb for all of us. Because we have all have different ways and means on how we are getting this money. So if the money is coming from someone else, like the Mofire guy, I would say he doesn't care, right? Maybe he's chasing for appreciation and that's good for him, right? Or maybe he might chase for both, and again, that's good for him. But hold on, whoever wants to lose money. So I've seen people as well that say they are buying properties hoping that they are going to top into the bank. For now, subscribe. They're going to subsidize, not subscribe, subsidize. And whilst they are subsidizing, at a later stage, they are hoping that appreciation will catch up and they'll make money. I started off that way. That's exactly how I started off, thinking that one day when I have my portfolio and I am topping up at 300, 500, 1,000 rand there, but at some point it's going to even up, and at some point I'm going to start making money. But what if this is Uncle TJ's best position? Yeah, this is my best position. Whether you are hedging your money, whether you are getting that money from the bank, my best position is. And if I can get to that position, this is my best position, this is the best position I want to play in. And I hope you see why. I come from a background where I don't have money, so I'm utilizing a lot of the bank's money, right? That's my position. If your position and my position are the same, then we are in the same boat. Okay? Cool. Right? Now that's a train. Yeah, we're in the same train. Right, good. So with that, I am going to focus on cash flow. Why do I want to focus on cash flow? Because I want to be able to pay the bank. If I pay the bank, I also want to make a living today. Making a living today just basically might not mean that I want these properties to sort of like drive my everyday living. Maybe not. But hold on, what if I can do a holiday after a year to 2 years? And it's a freaking amazing holiday. Wouldn't that help me? The answer is yes, isn't it? But nobody wants to take away money. Nobody wants to make a loss. So that's my position number one. I want to make cash flow. Position number two, hey, I am doing this for a long time because property is a long-time game. What if I am also going to be buying in the areas where I can make a 7 and 10%, because in a year of 10 years, yes, you know the mathematics now, isn't it? But what if I combine the two? That is my best position, because all of a sudden my property is making money twice for me whilst I'm doing nothing, right? So I've got my tenants and they're paying for me for my bond and I'm making money. What is the best cash flow? How much? Is it a 5,000? Is it 10,000? Is it 100,000? I don't know. For the guy who is doing more fire, that might be different. He maybe not care. But for me, this is a business for me, so I care, right? So I want to be able to get this little monies that I'm going to be getting from this cash flow today, but I also want the appreciation to go with me. If this makes sense, or if you do have any other comments that you want to ask at the bottom here, you can literally hit me up with any question. Comments if this makes sense to you. If it doesn't make sense, again, comment. Either way, I want you to comment. But if you haven't subscribed, hit the subscription button as well. And also, remember to share this information. I am doing this so that you and I can be a little bit clever. What about our brothers and sisters that don't know about us? Share it with everybody so that we can all be better informed and move forward to our financial education to grow bigger. And we can do bigger things. It is I, TJ. I will check you out on the next video.